Welcome to the PVW Law video library discussion regarding private foundations. In general, a private foundation is a legal entity created for the purpose of carrying out some philanthropic purpose. Like public charities, private foundations are tax-exempt entities under Section 501(c)(3) of the Internal Revenue Code. Unlike public charities, however, private foundations are not generally funded through public donations, but instead have a single major source of funding, usually gifts from one family or corporation. Most private foundations do not operate charitable programs directly, but provide grants to other charitable organizations and individuals. A private foundation must have an underlying legal entity. State law applies in choosing the correct entity. A foundation must have governing documents such as articles of incorporation and bylaws. Federal law requires the existence of certain provisions in the organizing documents. Once the foundation has been properly created with the state, the foundation must file with the IRS to obtain the tax exemption. After creation, a private foundation must diligently comply with state and federal filing requirements and rules to avoid loss of tax-exempt status. There are three main types of private foundations. The first, and most common, is the private endowed foundation. In a private endowed foundation, the foundation's assets create a principal, or endowment, that is invested for the purposes of making annual gifts to charity. These foundations are generally required to make qualifying distributions of at least 5% of the value of the foundation's assets annually, which usually comes from the foundation's investment income. The second type of private foundation is the pass-through foundation. Unlike the private endowed foundation, the pass-through foundation serves primarily as a grant-making foundation that distributes all of the contributions it receives each year, instead of a smaller percentage of its assets. The advantages of the pass-through foundation include the ability to deduct a higher percentage of adjusted gross income for individuals who contribute, the ability of capital gain property contributed to be fully deductible up to its full fair market value, and the receipt of tax benefits of the contribution the year the contribution was made. The pass-through option for a foundation may be made or revoked on an annual basis. The final type of private foundation is the private operating foundation. The operating foundation uses most of its income to fund its own charitable programs or services. Some examples include museums, libraries, and research facilities. Private operating foundations are subject to most of the restrictions and requirements of other private foundations. However, there are some notable differences. First, operating foundations are not subject to the excise tax on failure to distribute income. Second, contributions to private operating foundations are generally subject to higher deductibility limits than contributions to most other private foundations. Finally, a private operating foundation may receive qualifying distributions from another private foundation provided that the contributing private foundation does not control it. Regardless of the type of private foundation, ongoing compliance is required. Various taxes and rules apply to ensure compliance with tax-exempt purposes. A private foundation must engage in primarily tax-exempt purpose or risk losing its tax-exempt status. One of the taxes that applies to private foundations is an excise tax paid on prohibited transactions. The prohibited transaction rules generally seek to prevent foundation founders from using the foundation in any way for a personal benefit rather than a charitable purpose. Prohibited transactions include self-dealing, failure to distribute income for charitable purposes, excess business holdings, jeopardizing investments, overpaying salaries to family members, and taxable expenditures. Another type of tax that applies to private foundations is the tax on net investment income. This tax does not apply to private operating foundations. Private foundations must file an annual return, Form 990-PF. The Form 990-PF, along with the application that was filed with the IRS to obtain tax-exempt status, must be available for public inspection. The The foundation is required to publicly disclose other documents as well, including documents substantiating any charitable contributions made during the year. The reasons to consider a private foundation include the desire to create a charitable vehicle to which donations can be made and managed over a period of years, along with the desire to involve family members and/or friends. Perhaps there is a certain type of mission you wish to support. If you desire active involvement in a charitable mission over time with friends or family, a foundation may be the appropriate choice for you. If you would like to consult with one of our estate planning attorneys regarding the creation of a private foundation, you may complete the estate plan intake form on the Client Tools section of our website or email us from the Contact Us tab on our website at pvwlaw.com.